The award-winning GHS-TV, Germantown Community Television, your hometown news and information station.
Welcome back. With us now is CPA Gus Wilson. We're talking about tax preparation. Before the break, Gus, we were going through the different documents to bring to your tax preparer, and we had gotten through the W-2 and what all of that was. What are the other reporting documents out there?
Well, chances are if you are a gainfully employed person and you don't receive a W-2, you're in business for yourself as a contractor, in which case you'd receive a 1099 miscellaneous. If you are a contractor and you do receive one of those forms, the return does get a bit more complex. Alongside of that form, you also need to bring records of income received that did not receive a 1099. It's your job to make sure that you report all your income on your return. Likewise, it's your job to make sure that you're not paying too much tax, so bring in all your receipts to match up against that 1099. Anything that was a bona fide business expense in earning that income on the 1099 is deductible, and this is all Schedule C type stuff. And just covering some of the high points: health insurance, vehicle, mileage or utilization or actual expenses, any kind of telephone, cell phone, computer fees, anything that's a capital expenditure, which would be a large equipment purchase or technology purchase that would depreciate over multiple years. Make sure that you bring all that stuff in, and that way you will be able to minimize your self-employment tax, which is a big issue when you have a Schedule C, as well as minimize your federal income tax as well. Other forms that you've got are the K-1s, which is if you're an S-Corp or a partner in a partnership or an S-Corporation, you will receive a K-1, which is essentially your percentage of the earnings and losses out of that business. Once again, there's a lot of complexities involved with entering a K-1 into a tax return. Consult with your tax advisor about additional documentation that you need. There are certain instances where you do have unreimbursed business expenses that aren't included on a K-1 that are allowed to be deducted on your return as well. We talked about, the income generators. The last one would be, other 1099s. These would be your investment 1099s. You're talking about your 1099 dividends, 1099 interest, and 1099 proceeds from broker barter exchanges, which would be your stock sales. All those 1099s usually have money that you don't really see during the year. All of it comes from your investments. You might get a dividend check every once in a while, but a lot of times that stuff is just plowed right back into your investments. So those are very, very important because there's no backup records to it. When you have a 1099 miscellaneous, you've usually gotten a check for it. When you've got a W-2, you've got pay stubs. But when you get 1099 dividends and interest and stock sales, you really don't have too much in the way of records, especially if you're using a low-cost brokerage like a Schwab or someone like that. Getting that information is crucial, and the reason is that the IRS has the ability to match that up to your return, same as the W-2, same as the 1099. So if you miss a 1099, you can bet that the IRS will not miss it. They'll give you a notice, and what it means is you have to run back to your accountant, locate that 1099, write a letter, and send it back in, and it usually takes a good 2 hours, so you're talking additional fees for your tax return preparation. Completeness on the front end will ensure that your tax return is accepted, matches up correctly, and gets processed effectively. On the income side of it, on the deduction side of it, you've got 1098s. They can have, tuition to deduct, for your HOPE or your lifetime learning credit, as well as your 1098s for your mortgage interest if you're able to itemize. A great thing about the 1098s for your mortgage interest is if you are keeping your home loan in an escrow, they pay your taxes and your mortgage insurance out of it, so you can actually find those on the form as well. And so it's a good way to get all your home deductions in one good place. You get your mortgage interest, your real estate taxes, and your mortgage insurance as well. And just the catch-all, once we've gone through all these forms, is there are numerous other forms that you can receive. And anything that you get that would assist your tax preparer in making that return as accurate as possible is it's pretty much crucial that you bring that information to light. That's why I referenced the organizer. If your attorney or your CPA prepares an organizer for you, it really is in your best interest to complete that to the best of your ability. There's all sorts of weird credits hanging out there and weird tax rebates and weird income rules, and so the more we know, the better off we're able to assist.
Yeah, speaking of weird income rules, the new stimulus plan that was passed by the Obama administration, is that changing anything on this year's tax returns?
Believe it or not, it actually is. And this is, I'll have to refer to my notes here because this is really hot off the presses. This thing was signed this week as of this taping. And there's a lot of questions that have arisen because of this stimulus package. The key piece of legislation that affects 2008 is this $8,000 credit for first-time home buyers. The window to buy this home, to receive this credit, is in January 1st, 09 through 12/31/09, but the credit applies to your 2008 taxes. And there are certain phase-outs. I think if I look at my notes here, for single filers, if you make over $75,000, it phases out, and for joint, it's $150,000. But if you're a first-time home buyer buying a house in 09, you've got a 2008 tax credit. And it is a tax credit, which is amazing to me, because when I first heard them talking about it, I just assumed it was going to be like the $7,500 first-time home buyer credit, which was written in the rules, I guess last year or the year before, which was, they called it a tax credit, but it really was a loan. And you actually had to pay it back. But this seems to be just money free and clear. I'm sure there's going to be certain rules. I think there's a residency requirement, I think 3 years in that household. But it really sounds like it's a really good deal if you're buying a house.
And is that the only one that's going to affect anything for this year?
As best I can tell, it is, but there are some benefits that we are going to receive right now. I've got kind of just a few bullet points if you want to talk about the stimulus package a little bit. The first one is the unemployment benefits, which is a really big issue right now as we enter this really uncertain times and everyone's getting laid off. The first $2,400 of unemployment compensation that you receive is non-taxable now. The other thing that would affect unemployed people would be the workman's comp, or I'm sorry, not the workman's comp, the COBRA insurance premium. So if you are laid off and you go from the employer's health insurance plan to COBRA, the government will subsidize 65% of that COBRA premium. And like I said, all this stuff is really hot off the presses. There's a lot of confusion still, and hopefully there will be some clarification in the next few weeks about it.
Okay. Well, Gus, we thank you for being here today. Our time is up for this edition of Legalese, and I'd like to thank our guest for taking time out of his busy schedule to be with us and sharing his thoughts and insight. If you would like more information about Legalese or any other program on GHS TV, please refer to our website at www.ghstv.org. Thank you for joining us today, and be sure to join us next month for more discussion on legal topics. Until then, I'm Vince Perryman, and thank you for watching.